If you're not digital, you're dead.
FinTech is dead, long live FinTech.
It's not AI that's going to come for somebody's job. The fact the person who uses AI will be replacing the person who doesn't use AI.
Agreed. I'm not particularly a big fan of the vast majority of the VCs we have in this market. They don't know half the time what they're doing. They were well funded for whatever reason during the period. They threw lots and lots of money around.
I have an allergy to innovation for the sake of innovation or innovation for headlines. A few years back, we used to talk about fintechs eating banks' lunch. I don't think anybody's talking that anymore, right? One of the foundational things that I strongly believe in when I was pitching Neo Ventures as well was
Good afternoon, ladies and gentlemen, and welcome to today's episode of Couchonomics with Arjun. Joining me across the table on the couch is a friend. His name is Amith Rajan. Amith actually wears dual hats. He is the head of digital of the Wholesale banking division with Mashreq. And in addition, he is also the CEO of Neo Ventures, which is their CVC/venture building arm. Long introduction. Let me welcome Amith to the couch. Good to have you.
Thank you. It's a real pleasure. I think we've been speaking for a while. I've been following the show with great interest, and it's fantastic that we're actually able to see the kind of people you bring on board.
Thank you.
So lovely to be here. Looking forward to the conversation.
No, I'm happy to have you here too. Some of your if I may say, peers from Mashreq have featured in previous episodes. I think we've had Karthik. I think we've had Radu. So, welcome to the episode. And I'm actually quite interested because I'm going to actually jump straight into the question, right? Two hats. A lot of people from the outside might say, oh, there's great alignment, right? Tell us how these roles either synergize or collide.
So there is a significant amount of alignment. The Wholesale Digital Studio is, as you can imagine, mostly around the wholesale banks' digital initiatives and how do we work on the digital initiatives. Neo Ventures is a pan-bank responsibility. So I would say one fed into the other. Both roles to an extent, but on the Neo Ventures side more. My role sort of sits at the confluence of exploration and execution. So from the wholesale digital side, there is a bigger thrust on the execution piece because I'm solving real world problems. And one of the things we feel we've done pretty well is we are deeply embedded into the business. Mm-hmm. So it's not like a silo sitting in the corner, with the mad scientist trying to come up with new ideas. It is that we are closely integrated with the businesses, whether it's in the UAE or in our entire global footprint. We are constantly looking at problems that or friction that could be arising either with our customers, within the bank, with our employees, and looking to solve them.
Okay.
Whereas on the Neo Ventures side, there's a lot of exploration, there's a lot of disruption, there's a lot of, let's break this and see what happens. Mm-hmm. And I think that's the exciting part. That sort of allows us to disrupt ourselves. And that was one of the ambitions that, when I was pitching the idea internally, I was like, let's go out there and look for what's there in the market. Let's incubate ideas and ventures within the bank and really look and see how we can disrupt ourselves rather than the market disrupting us.
Fair enough.
Mashreq has had a good long tradition I think on the innovation side.
True.
We've had a number of firsts in bringing new products to the region. And Neo Ventures is also one of the first in the region to, really get that CVC concept home.
Okay. So we're going to split the discussion a little bit, right? So that I'm able to sort of paint a picture. Let's talk about the digital transformation in wholesale banking, right? So typically when you use the word digital transformation and banking, 99 or 100 people run straight towards the retail banking side of it, right? And there's good and bad reasons for it. So I'm going to be very pointed on this discussion, right? One is, why has wholesale banking always been the laggard, right? Is it because it's just not a priority for either the customers who you're servicing or the way the banks need to operate, right? And do you still see the potential to be very limited and incremental rather than exponential, which is what we've actually seen on the retail banking side?
So I agree with you, right? wherever you go in the world, it's always retail first when it comes to digital. And today, to be honest, retail and digital is no longer a nice to have. Mm-hmm. It's an existential thing. If you're not digital, you're dead. Mm-hmm. Now you're seeing that same energy spill over into the SME space over the last 2-3 years. And I think for the next 2-3 years, you're going to see a lot of activity happening in the SME space, whether it's on the onboarding piece or the KYC piece or the payments piece or the new products that they want to do. So there's a huge emphasis. My personal belief that same energy will spill over onto the large corporate space immediately after. So it's a you can call it moving on the curve.
But what's the catalyst?
Right. So the catalyst, two things. One is what I call the sort of amplification of the consumer.
Okay.
So you're seeing my corporate customers who are now coming, and especially the next generation of customers who are coming and saying, hey, I want an experience on my corporate banking app and my corporate banking experience to be exactly the same or even better than my retail experience. And that is gaining momentum. And the second is just the maturing of the tool set. Whether you're talking about compute power, whether you're talking about data maturity, whether you're talking about the new, AI tools that are available, there's just a lot of new tools, technologies that just didn't exist earlier. So we have in the bank tried to bring all of that together to really sort of turbocharge the way we deal with our consumers. And that is the biggest catalyst.
Okay. So, but then let me ask you the typical classical question. Even on the retail side of, if I may say, the digital banking or sort of the, I guess, next gen banking, if you use that term, a big issue has been legacy infrastructure, right? And for all the right and wrong reasons, again, we can debate about why legacy infrastructure exists, why hundreds and hundreds of platforms are still operating. They all need to talk to each other. They all talk to each other quite poorly, so on and so forth. If I was to again move my lens across to wholesale banking, whether that's cash management, transaction banking, treasury, so on and so forth, that legacy problem exists, arguably even more because the evolution has been pretty limited, right? So how do you overcome that sort of, if I may say, that friction to change? Because I'll be honest with you, I think wholesale banking can continue carrying on the way it is with a few more scotch tapes, band-aids, left, right, and center, and you still continue to earn, what you need to earn because the customers can be dealt with in a number of different ways, right? A retail customer, if I may believe, is a little bit more fickle, is a little bit more transactional. Corporate customers have sort of deep-rooted relationships, they're heavy relationships. So how are you going to overcome that infrastructure challenge without having putting out some serious amounts of money?
First of all, I think you'll be surprised that, on the corporate side as well, while I agree that it's deep relationships, it's about every consumer looking for the little extra. So, and that is becoming more and more a topic of conversation within the customers. And when we are sort of responding to the customer's needs, very often the consumers or our corporate customers are taking for granted certain building blocks. And then the entire discussion is around how easy is it for me to do business with you. So the basics of pricing, product, etc. is obviously where the conversations begin. And if those are not sorted out, the conversation ends there. But after that conversation, and to be honest, there's a lot of sort of homogeneity in that conversation in the marketplace, then it becomes, what are the value added things that my bank is doing for me to make my life easier. And that's where you're starting to see this conversation evolving towards. And as you have the banks that give that kind of experience and that kind of ease of doing banking, you're going to see the consumers gravitate towards that. Now, at Mashreq, we are not trying to solve the problems of today. So like I said, we are probably one of the few banks in the region for sure, and even globally, who have consistently over a period of time invested in and grown this wholesale digital studio and wholesale digital transformation capabilities. And that's because we believe that it actually gives us that edge in the marketplace. And it does. So whether it's in terms of improved customer experience, whether it's in terms of revenue opportunities, risk management capabilities, or operational efficiencies, those are sort of the 4 pillars we look at. Each of them, we've solved friction points and we've seen that benefit. Now, when it comes to legacy infrastructure, totally granted that, we have to deal with legacy infrastructure and we have to deal with legacy mindsets, which I think is more difficult to deal with. So on the retail side, you've seen, many of them have actually gone forth and put together a digital bank outside their main bank, so to speak, right? You've seen so many examples of banks doing that.
Yep.
Not that easy to do it on the corporate side. These are much larger and stickier platforms with much, much larger deal sizes associated with them. So it's not that easy to sort of rip and replace. So what we've done is we've sort of built on top of and evolved it so that we can at the same time service the customers while, over a period of time, make it easier for us to do the work internally.
Okay. So that begs a question. I'm going to ask you to wear your sort of CVC hat for a second, or your FinTech hat for a second. We were in Singapore in November for Singapore FinTech Festival. And there was a very interesting conversation. I think 4 or 5 of us was a part of. I don't know if I was the instigator, but might have been, where I think the analogy I was, or the point of view I was sharing was, FinTech is dead, long live FinTech, right? And what we were trying to talk about is that FinTech is now moving to core infrastructure. So it is powering financial services. It's no more just, with all due respect, the buy now, pay later players in a small wallet, right? Are you in Mashreq now working with FinTechs, infrastructure FinTechs, to solve some of your problems, not problems, or challenges or opportunities in the wholesale banking side? Or do you think that we still haven't seen that maturity of FinTech, at least in this region?
We are looking for solving those problems with whichever partner we can find. So having said that, yes, I think the traditional sort of FinTech scope is we haven't found the real partners in the region. On the wholesale side, it's still a lot of big tech. Yes, so we do partner. And if I'm wearing my CVC hat, that is something that really gets us excited.
Right.
So I look at Neo Ventures as our innovation funnel, our disruption funnel. It's our way of, dealing with our ecosystem and expanding that and collaborating. So you're right. A few years back, we used to talk about, FinTechs eating banks' lunch. I don't think anybody's talking that anymore, right?
Yeah, no, thank God for that.
Wherever I go now, it's all about, collaboration and not competition. And I think that's a fantastic space we are in today. So it's the way the market is maturing. Today, when I talk to a FinTech, it's about what can I bring to the table that helps them. And it's normally not just the money, right? I'm not talking about the investments. It's more about, the knowledge of the market, the regulatory frameworks that we've dealt with, the scale, obviously, the access to clients and access to markets, of course. And all of that put together becomes a pretty potent pill for them. And from our point of view, it's about time to market, speed to market, getting those products in quickly, and really force multiplying our transformation journey. So we do partner with them, especially in the space of maybe the digital asset space, all the newer sort of areas that we're looking at. Definitely, I think there's some very strong FinTechs out there that they're working with, whether it's on the digital asset space, whether it's on the API banking space, whether it's on the open banking space. All of these areas, for sure, we're working with FinTechs. To be honest, the FinTech maturity and the FinTech penetration is much deeper on the retail side, getting deeper on the SME side, but I think this is the next space.
This is some place to go. So I think you've kind of given me the natural sort of natural next question, which is, as you evolve digital banking and we start seeing this greater confluence of, if I may say, regulatory-led technology intervention, which is APIs. Let's park that to the side, because I think we've had lots of conversations on that topic on the couch previously. But I'm very keen to sort of ask you 2 questions, and I'll split the questions. I don't want to ask both of them at the same time. Firstly, and not just because this is a show and we have to talk about AI, but I think my question here is this is the way I see it, and please correct me if I've got it wrong. I think people there is a significant sort of school of people or a group of people in banking which still sees AI as is purely an efficiency tool or a productivity tool, right? Nothing wrong with that, but it's kind of looking at saying, how do I optimize some of what I have, and sort of a natural extension of what machine learning was, right? Others actually are seeing AI as, no, this is a foundational layer, this has a 10x impact, right? But how do I kind of rewire my business? And let's not even talk about the cultural side, because that's a huge thing. How do we rewire and introduce AI in a manner that we're able to get closer to that 10x impact, right? Now, I'm not asking you to spill the beans as far as Mashreq is concerned, so you might want to answer this question from your own personal perspective. How do you see banks generally in this region deal with AI? And are you guys all coming together as banks under the various associations and bodies and start tackling this? Because, there's arguably an existential threat around the corner in terms of the chasm between the ones who adopt AI and the ones who don't at the speed that they should.
Yeah, there's no conversation you can have without AI coming in at least once. But and it is true, it's the level of maturity and the level of acceptance varies. I think one of the main things about the way we look at AI is, for now, again, given the fact that we are a heavily regulated industry, we look at it as augmented intelligence. Mm-hmm. We still ensure that we have a human in the loop to start with. And so if I look at the sort of principles that we use for AI, right? The first one is AI with a purpose. So honestly, I have an allergy to, innovation for the sake of innovation, or innovation for headlines. Mm-hmm. So I want to see real value coming out of what we're doing. Now, operational efficiencies are typically the lowest hanging fruit, and there's nothing wrong with that. Mm-hmm. I always say, if you want to really set up a successful digital transformation / AI program, get some runs on the board early.
Agreed.
So you keep the stakeholders warm, you get the guys who don't really understand where we're heading towards. If you're able to show them some quick runs on the board, you get them interested, you get them warm, and you keep that sort of positive virtuous cycle. So operational efficiencies typically are one of the first places that we would go to. And, we're no different from any other bank. How do we make it easier for us to deal with documentation? How do we make it easier to deal with data? How do you make it easier to sort of take out those manual tasks which are monotonous and, repeated? So that's sort of where everybody starts off. Now, we last year were asked by our CEO to come up with our AI strategy, and he sort of threw that challenge open to the entire bank, and that naturally resulted in all of us sort of rethinking the way we're doing business, because it's about whether we want to use AI as a tool or do we want to use it as a foundational piece of new technology that's going to really change the way we do banking. Mm-hmm. And we honestly feel we're leaning towards the latter. Mm-hmm. We want to see how we can use it to really make a big difference in the way we deal with our consumer, way we deal with our data, the way we deal with our day-to-day. So we are looking at it from a consumer point of view. It's like, and starting from the very simple, the onboarding piece. Mm-hmm. The first time a consumer meets the bank is typically, an area that has a significant amount of friction. Whenever I go out, the two places I always get complaints about are either onboarding or KYC. Mm-hmm. And that's not just Mashreq, right from the beginning. Everybody likes to talk about how onboarding or KYC takes such a long time. It's so paper-based, and it's, asking the same questions again and again. So that's a place where we've completely re-engineered the entire platform from bottoms up. We spent a lot of time with our customers, with workshops. We re-engineered the entire platform. We reduced the number of questions we're asking them, and we brought AI in there so that we're reducing almost 70% the amount of questions they're going to ask us. That's obviously going to have its benefits. That's from the operational efficiency point of view. From a revenue point of view, we're looking at how can we use this to identify new areas of revenue? How can we identify early warning signals from a risk point of view? So across the board, we're looking at how we can use AI. Now, AI is being looked at, from a legal point of view, from an HR point of view, from a finance point of view. So literally, there is no part of the bank that is not looking at how we can change it.
Your CTO is having a wonderful time.
My CTO is having to sort of line all of this together and ensure. So the second thing, so AI with a purpose is the first part. The second thing is AI with governance. So we have set up an AI council. There is, we spent a lot of time on a data management framework.
Okay.
Before this role, I was the chief data analytics officer for the bank.
Okay.
So I've spent years with, and to me, it's not the AI models that have bias, it's the data that has a bias. So scrubbing the data and getting it, into a usable format is half the job.
Yep,
or
agreed.
80% of the job. So, making sure that we have a data management framework, we have an AI ethics and responsible AI framework, those guardrails, we spent a lot of time putting them into place.
Okay.
So that's the second. And the third thing, like I said, is the AI with the human in the loop. So it's augmented intelligence. I just want to end by saying that, it's not AI that's going to come for somebody's job. It's the fact the person who uses AI will be replacing the person who doesn't use AI.
Agreed. This echoes with this, one of my favorite sort of emails or memos which have come out in the recent sort of few weeks. I think I mentioned it last time we were together, which was the Shopify CEO who basically said that it's you plus AI powered you now, which is going forward. So
100%.
embrace it. 100%. So I agree. And I think I do not know every CEO in the region, but I think there is an element of top down in this. I do think that the message needs to come right from the top, and I think that will help with that sort of change curve journey, right? Because otherwise you get stuck in that linearity. And
not just that, then it also depends on what kind of problems get solved and what is the size and scale of that impact. Coming back to your original point, right? Is it something that you're looking at sort of just playing at the fringes and just making my life a little better, or am I fundamentally looking to re-engineer what I'm doing and rethink the way I do things? The more senior the sort of direction is from, the larger scale that change will be, and the more seriously people take it.
Okay. Let's switch to digital assets for a couple of minutes. Last time we were together, I was at your lobby. We bumped into a common friend of ours who's got a new digital, a digital assets platform. And I'm assuming you're not yet announced whether you're on it now, irrespective of whether you're on it or not. So lots of noise on digital assets, right? Some of it is actually quite productive. I think everybody is getting uber excited about stablecoin. We are recording an episode, and yesterday Bitcoin did hit $111,000. Since then, it's come down a bit. I don't know where it's going to head next. But stablecoin actually solves for a lot of the challenges, especially around payments and moving money, and even wholesale payments, right? So on and so forth. How's the bank looking at digital assets? How do you think the country is looking at digital assets in that context?
I think from a bank's point of view, it's good that we've seen some of the other banks in the region sort of offer at least the basic crypto brokerage and trading services. That's good because it sort of opens up the field. So from a retail point of view, that's probably one of the areas where most people are looking at going. From the wholesale point of view, stablecoins is absolutely an area of focus for us. We're looking to see how we can participate in that economy from a cross-border payments point of view, from tokenized deposits and digital currency point of view, from just the fact that we are able to facilitate payments. So all of these spaces,
use cases for you,
use cases for us that we're looking at. We're also looking at smart contracts, and we were one of the first banks in the country to get onto NorBlock, which was the very early KYC sort of digital DLT platform that was there. So we were one of the first banks to get onto that, and we're looking at smart contracts. We're looking at how we can use smart contracts to really participate in the digital asset space. So there's a lot of things that are getting discussed, and some of it which I can't talk about, but yes, we are looking at it seriously.
Let me ask a question, and this could be an Amith question. I was in Qatar yesterday. I was in an event which was being organized by the policymakers out there, and the conversation was, it was around digital assets, but it honed into tokenization of real world assets, and it then further honed into real estate, right? So I actually think tokenization of financial securities, I think that's just a natural extension. It'll happen. The frameworks sort of exist. Obviously, they need to evolve, but I see a natural extension. Switching across to real estate and other real world assets, right, whether it's art and so on and so forth, gets quite interesting. What's your view in terms of that? Because I actually, while I get super excited, I can list 20 reasons why it's not easy to do it today, right? We have some outlandish numbers, which, consulting firms and others have come up with, $3 trillion to $16 trillion. $16 trillion, if I'm not wrong, is 10% of the global GDP, if not long. Where do you sit, sort of from your perspective? Do you really see a future where a lot of things will get tokenized?
So it all depends on the friction or the lack of friction, right? Do I see real world assets getting tokenized? Absolutely. I think the direction of travel is very clear. It is, and especially in our part of the world, the regulators are also very keen. It's about giving consumers more options. It's about trying to move away from paper-based money as far as possible. And so a CBDC / stablecoin market just makes a lot of sense. Whether it's from a tracking point of view, whether it's from a removing friction point of view, whether it's from, whether it's local or cross-border payment facilitation, just makes a lot of sense. Now, how quickly are we going to get to the large-scale mass tokenization of real-world assets? Your guess is as good as mine. But what I can foresee is that, you'll start seeing some larger players trying to take a crack at this, and that is going to help sort of
galvanize the market,
make it more acceptable. Ultimately, it's a question of, like I said, ease of use. So if we're able to make it almost, happen like it happens on the phone today with our payments, it becomes much easier to use for people. And then banks, whether they come on board immediately or they come on board later, they will come on board.
Fair enough.
It's just a question of where do we start? And probably one of the fewer larger players in the region are going to, take a crack at this, and that will sort of get the momentum going.
You mentioned CBDCs. I'm just going to make a statement. You can choose not to respond to it. I can't see retail CBDCs ever getting traction, right? On the wholesale side, the jury's out in terms of stablecoin versus wholesale CBDCs. My view is that 96% of the global economy kicked off on some project or the other, right? Regarding either retail or wholesale CBDCs. There was, if you remember 6, 8, 9 months ago, we couldn't make it through a news day, at least in the boring world that we live in, without having to hear about CBDCs. But it's quietened out a little bit in the last few months, right? A number of the projects, including the likes of M-Bridge and others, have sort of sweetened. Your view, retail CBDCs, do you really think there is a need for one? And second question, how do stablecoins and wholesale CBDCs coexist?
I think digital dirham is something that the regulators are pretty keen on. Now, a CBDC versus a stable coin that is backed by the government.
So sovereign stablecoin, yeah, exactly.
Really, as far as they're concerned, I don't think they're going to play favorites. They're going to leave it to the market to decide what gets adopted faster, what gets adopted at larger scale. But I think there is room for both to play.
Okay.
And if you look globally also, there is, you're starting to see that. CBDCs are fantastic to facilitate large value cross-border payments that typically, they do have a lot of friction in the non-CBDC world. But to your point, I think that those use cases have been mostly experiments.
Yeah, because, I'll leave it with this one thought in my view. There's a massive infrastructure interoperability challenge here, right? Because, how many other sovereign CBDCs and sovereign stable coins can we have, right? In any case, any lasting thought before we switch across to new ventures? Because I'm happy to go there.
Yeah, no, I think finally...
Are you doing any projects in CBDCs within your lab, your wholesale banking lab? Are you experimenting anything?
We are working on digital assets in the lab. We're working on digital assets. We've done CBDC as well as stable coins that we're looking at. But like I said, which one, if there is a need for any one versus the other, the market will decide.
And you will evolve accordingly.
We'll evolve accordingly. Our primary role is to give that optionality to the customers, and we're working towards
to make sure that you're there. Okay, let's talk about new ventures, right? So I think it'll be useful for you to just paint a picture around what does new ventures do.
Sure. So, I mean, CVCs are not a new concept. You've seen some very, very large and well-run CVCs, whether it's on the the manufacturing corporate sector, whether it's on the FMCG side, and whether it's on the banking side. So I'm sort of standing on the shoulder of giants. So thankfully, I didn't have to reinvent the wheel. Having said that, they're a relatively unique beast for this region. We're sort of the first bank that really set up a CVC arm. It's a separate legal entity housed in DIFC. The bank has an IC that works on this. We have a board that is separate for Neo Ventures, and we run it at arm's length from the bank, and that's a very clear decision for two reasons. One is that for two businesses. One is our venture building. So we are keen to incubate. We are keen to build ventures and build products that we can take out to the market. And the second is from an investments point of view, where we want to have that sort of independent oversight of the investments. So from a venture building point of view, we are looking to two things. One is products that we built internally, which we know work, which we know because we're using them on a daily basis. And we've built them after going out to the market to see if there are other products out there. And when we realized, either they're not there or whatever there is out there is not fit for purpose and we're going to have to spend a boatload of money to customize them, so let's just build it ourselves. So those products we're using on a daily basis, the product market fit is fine, they're purpose built and they will do their job wherever you take them in the world. So those products we want to take them out and we want to offer them. So the reason we have that Chinese wall is because, we don't want any concerns of, is Mashreq going to see our data and is there any kind of bank, sort of involvement in there. There's no bank involvement. It's a separate company. It's a separate team. It's a separate team that takes that product out and builds it and puts it on the shelf and ships it to our customers, implements it. It's an entirely different business. The second is we also partner with Fintechs. So, a few of the products that we've built internally, they sort of are fantastic bolt-ons to Fintech's existing product suite. So we're working with them, and a few of them we've made public as well. So, we are doing a partnership with TradeStream on one of the products that we want to take out to the market. They're going to bolt it onto their product and they're going to take it out to the market. We have another product that we're working on and a similar kind of partnership, which we've not made public, but that's the second model. And again, that is at arm's length. We don't want the bank to be involved in that because this product that's working for the bank will continue to work for the bank. This is something that's entirely outside. On the venture investment side, again, we've been doing venture investments for quite some time. So it's not now. So almost from 2018, we've been investing. But it's been relatively sporadic and, episodic. Somebody, we meet a fintech that we like and we want to invest in them. And then, we've invested in them. Now, we want to make it much more organized. We want to make it much more program-based. There's a fund that's set up for that, and we want to track it, we want to monitor it, and we want to make sure that we are hitting those KPIs from a performance, from a governance, from a monitoring point of view. So that's the investment part. We've set it up. From an investment philosophy point of view, we look for pretty much three things. One is there has to be a strategic fit with the mothership.
Okay.
So there has to be a commercial strategic partnership that we are talking about, and it's not just a pure investment play. So we're not a typical VC in that sense.
You're not looking
we're
just for financial returns. You want some strategic value.
We want to see some strategic value. So the investments we've made in the past, like Nimcard or Touche or Cashew, or we've done another one on the wholesale side, Newbridge. They're all companies that either we are working with, we are using those products, or we are offering those products to our customers through us, whatever it is, right? So there's a strategic commercial reason to partner with, on the back of which we've invested. And the investment is, always a minority investment. We're not telling them how to run their business. It's about us having a seat at the table, helping with the evolution of the product and looking at the upsides on the back of that. And then the second one is we're looking for scale. So we are looking for companies that want to grow beyond just the country or the region. We're looking for global plays. We don't necessarily have a geographic constraint, right? We are present in 13 markets. We can invest in any of them or in their near neighbors if they're going to do some business with us. So we've spoken to Singaporean fintechs because there are products that we have today that we're working with them. We're talking to Indian fintechs. We're talking to fintechs in Bahrain, for example. So the second thing is, we want to really go and we want to partner with companies that are looking at global scale. And third thing is that, we're looking for companies that are doing something with AI first. Again, I think that is our commitment and recognition of the fact that it's a real paradigm shift that we're talking about, and it's not just something that, we want to think about as an afterthought. So when we talk to our portfolio companies and when we look at our pipeline, there's a lot of bias towards that.
So I got a couple of questions on this, right? So my first question is need generation, right? So where do you generate the need, right? In terms of we need to solve for this problem, or we're looking to, to enter this market or enter this segment or customer segment or whatever else. The second question is, how do you guys scout?
So we are fortunate that, again, I think the kind of bank that we are, we have a lot of people in the bank who are looking for the fintech opportunities and are looking for fintechs to solve problems for us.
Sure.
So I would say it's a bi-directional sort of funnel. We go out into the market, we talk to the fintechs out there, we attend the events, whether it's a fintech summit, whether it is the Singapore Fintech Festival, whether it's the one in Saudi, Leap, Seamless, everything.
Right.
So we're out there, we're meeting fintechs, we're constantly talking about how do we connect the dots. But to be honest, I think the bigger sort of impetus for us is from our own internal businesses who are constantly also talking to fintechs. You mentioned Karthik, you mentioned Radu, they're talking to fintechs all the time. Mm-hmm. And they're looking for, partners who can either force multiply what they're doing or solve a problem or, open up new opportunities. And when they see some traction somewhere, they would come to us. Mm-hmm. And we're fortunate that I think we've built that kind of credibility in the bank now that they do come to us and say, hey, we're talking to a fintech. There could be a potential investment opportunity. We're looking to solve this problem. They seem to be really good at it. You want to kick off a conversation on the investment piece. It helps them, it helps us. And so that and it helps the fintech. So that I would call it bidirectional. And the scouting is, like I said, it's literally all of us being out there all the time, talking to fintechs, as well as really, this is, with the purpose. We're not looking for innovation for the sake of innovation. We're looking to solve problems. And, with the growth pace that we have and the kind of transformation that's happening in the marketplace, there are enough opportunities and problems to solve.
Yeah, and I think that sort of beckons the question, and I think this is more of an industry question to you, is right. So we've gone through, I don't want to use the term funding winter because this winter is never ending, right? It's been through 3 consecutive years, year on year, where the funding volumes have dropped out of the VC sort of environment. If I may take the early stage, we don't really have a well-sorted, well-structured private equity environment in any case. I think it's very early days. We have a few growth VCs. I'm not particularly a big fan of the vast majority of the VCs we have in this market because I actually think they don't know half the time what they're doing, right? They were well funded for whatever reason during the period. They threw lots and lots of money around, right? And some of them got scale. Most of them, in my humble opinion, don't know what they're doing. Has that environment and that lack of availability of funds, because even today, the vast majority of the fintechs or the startups, if I may use, I speak to quite a few because of the way I'm integrated. Money is not easy to come by, but at the same time, there's lots of it available, right? Has that opened up unique opportunities for you as CVCs? Are you seeing deal flows that you would typically not have seen in the past? Are you seeing finally valuations that are a lot more acceptable for a bank type VC rather than VCs who are just ready to sort of drop the dollar? How have you seen the market change over the last few years while you've been running this?
So, fantastic question. I think one of the things that I must point out is when we first started this, I was a bit worried that, is this a constraint we're putting on ourselves? The fact that we're only going to deal with fintechs and startups with a relationship with the mothership or to solve a problem at the bank. But then I've realized that actually that's not a constraint at all, because that really gives us focus. And that really allows us to sort of kick the tires and come up with problems that we want to solve. And given the size and scale and the nimbleness that we have, it's actually helped us. If you look in the marketplace also, one of the few bright spots in this funding winter, so to speak, has been the CVCs. So CVC activity actually has gone up over the last 3 to 4 years. You will see that, the founders and startups that partner with a CVC have a much better chance of making it rather than not. Because again, to your point, there's a lot of money out there, but it's what that money comes with. So when we are coming and talking to a fintech and we're putting money into them, we're also opening doors, and we believe we can open those doors because they are in our space faster and better than most other typical VCs would be able to. I'm not saying that they can't, they do, and they obviously do that very well. But because we are playing in our sort of playground, we're pretty confident that we can give that kind of multiplier effect to the startup, which otherwise would be difficult to do. The second thing is we've got, again, given our size and the amount of time we've been in the marketplace, we have an excellent relationship with the other VCs. So, we've, and remember, we're young. If you ask me, we're maybe about a year old in terms of having set up all that framework, and many of those frameworks are still being set up. So we're a relatively young VC, but we have a fantastic ecosystem connections, and so we have the benefit of that. So we talk to our counterparts all the time, and we take our portfolio companies to those counterparts, especially when they want to go bigger and they want to go global. So I think that helps as well. And finally, I think the most important thing when you're thinking about from a startup point of view is am I looking for a partner or am I looking for an investor? So as far as we are concerned, we're not your pure investor. We're more of a partner. And on the back of that partnership, we invest.
So let me put the counter on that question, because this is the hardest question which fintechs or startups have, right? Especially the B2B infrastructure providers. Their concern is, and I'll take Neo Ventures as an example. So we bring Neo Ventures or Mashreq indirectly onto the cap table, right? They take a significant, but not the majority. So let's assume 5 to 10%, right? You take a board position. They say that creates a lot of challenges for them to be able to sell into other banks, right? I don't know how far that is true or not. I'm not going to question. But what I'm going to do is put the counter question to you. So I have a fintech, right? I have a 10% investment from your competitor down the road, right? I'm now pitching to you just as a provider of service, right? How are you guys responding on your wholesale digital transformation side of it?
I have co-invested with banks.
Okay.
The investment we did in Newbridge, which was so all our investments in the past were on the retail space. The first investment that we did on the wholesale space was in Newbridge, which is disrupting the loan syndication business, right? So me and my friend together invested in them, and I think that is something that's worked well for both of us. Both of us are on the board, and we are in fact actively encouraging the founder to go and talk to other banks.
Okay.
Because we think that adds value to him and his company, and it adds value to us as well. If I come across a fintech which has actually got funding from another bank, and actually I am talking to one of them, it actually gives me some comfort.
Okay.
Because it lets me know that this guy has credibility, and the product that he's selling to me will work, because I have another bank who's actually put money into this guy
and potentially
using them. So it actually gives me a lot of comfort that these guys know what they're talking about. I don't think there needs to be any kind of competition in this space for many years to come, to be honest. And if you look globally, that's how it's worked. If you look at the large, for the symphonies of the world, or the spin-outs that have come out from banks in the world outside, there has been a lot of sort of co-investments, so there's so many examples where banks have come together as consortiums, put money into startups, and that's really allowed them to take off, and everybody's benefited as a result of that. So I think that's something that I would be very comfortable doing, and I would encourage everybody in the marketplace to look at that more. It helps the startup, it gives them access, it gives them scale, it gives them stability, and it helps the investors because, hey, it's always nice to have your so-called competitors sitting around the table with you and discussing how we can, sort of grow this startup.
No, I think fair enough. I think it's a question I did want to ask, and I've got the opportunity to, because I meet a lot of fintechs which are actually concerned about that whenever a CVC discussion starts. They start with the enthusiasm, and then over a period of time they start getting a bit worried about, oh God, so if I do take this investment, does that mean I'm not going to be able to operate in this market beyond one more player? Because someone will say, well, you have an investment from Mashreq and Mashreq competes with me, and this infrastructure is part of the differentiation.
So if I may,
Please.
I think that's one of the foundational reasons why we set this up separately.
Mm-hmm.
So like I said, I was very clear from day one, this has to be a separate legal entity. It's a separate team. It's a separate set of KPIs. And as far as I'm concerned, it's obviously there's a relationship with the mothership, like I said, but that's because, that's a customer of that startup. We're a customer of that startup. But as an investor, we play no role in confusing those two parts of the equation.
Got it. Last question. To others, other banks, other financial institutions, other institutions who are looking to go down the CVC, venture building route, right? Talk to me a little bit about, I know you said it's early days, but you have a career also, not just what you've done here at Mashreq. Talk to me about some of the battle scars that you're carrying. What are sort of the 2 or 3 sort of highlights that you'd want people to sort of be aware of?
One of the foundational things that I strongly believe in when I was pitching Neo Ventures as well was the whole idea that we shouldn't be afraid to disrupt ourselves. Mm-hmm. It's about how do we get that innovation funnel energized? How do we get the best of the world to come and work with us and partner with us? And so that sort of innovation/disruption angle is very large. Second is the fear of failure. And that's a cultural thing, and it's pretty strong in the region as well, is that, I don't want to fail. How am I going to convince my boss that, this is something I put money into and it's failed? But that fear of failure, we need to sort of be very clear. If we're going to go down this route, some of this will fail. There's no way all of this is going to succeed. Mm-hmm. So as a
fail fast.
Yes. But as a consequence of that, we need that top management support.
Agreed.
Senior management support is essential. And then finally, I think like any business, it has to be treated like a business. You need to fund it properly. You need to get the right people in there, and you need to either go whole in or stay out.
It's not a hobby horse.
It's not a hobby. It's not something that you can, sustainably run on the side of sort of as a hustle, as a side hustle. It's something that will become, as it grows and as it becomes bigger, it will actually, if done well, it will start giving those kind of results into the bank. It will start bringing those kind of products. It will start bringing that kind of energy. It will start bringing that kind of thinking into the bank, and the bank will benefit from that.
Excellent. Amith, thanks a lot for coming in. Have a good weekend. I know I've kept you late into Friday evening. That was not the intention, but I really appreciate you coming in, and I'm sure we'll be crossing paths, if not next week, definitely next month. So the conversation will go on, right?
Thank you. Real pleasure. It's lovely as always. And we'll keep the conversation going.
Excellent. So ladies and gentlemen, that was Amith Rajan, who is the CEO of Neo Ventures, which is part of Mashreq, and also the head of digital for the wholesale banking division. So with that, I'll say goodbye. Till next week. See you.